In this Track and Trade High Finance Trading Training video, I want to talk to you about the market calculators. Now, the market calculators were designed to help us know how big trends were in a dollar figure. So what I mean by that is I want to know if I would have bought 100 shares of GLD at this buy signal right here at the bottom, how big was this trend in dollars? How much money was it from this point to this point? The way I can do that in Track and Trade is I simply grab the dollar calculator, and that's this point right here, and I just stretch from one point on the chart to another point on the chart. And you can see this says $15, but let's come over here and look at the quantity. Let's change the quantity. Let's say we bought 100 shares of GLD, or gold, at the bottom of the trend, and it went all the way to the top of the trend. How much money would that have been in profit? That would have been $1,576.84. And if that's a little hard to see, we can change the font size, make it a little easier for us to read. So you can see that anywhere you stretch this on the screen, it's going to tell you how much money, based on the number of quantity or number of shares you purchased, that move would have been from any given point to any other point on the screen. Now we have another calculator that helps us also, and I'm going to back up in time, and we have that ability in Track and Trade to back up in time. I'm going to back up right to this buy signal right here, okay? Right to this buy signal. So I'm going to bring the chart back to this period in time, and what I'm going to do is I'm going to center that chart. Now let's say that this is where we were at in our trading scenario, and we wanted to bracket this market with a little narrow sideways channel. And so we're looking at this market and we're saying, okay, this market started to go sideways on us. And I can bring the text over to the other side by dragging it like this. So I'm saying this market's going sideways on us through this little narrow sideways channel. Now, one strategy to trade, if you have a margining account, which we can do in Track and Trade, let's come in here and say we have an account with $10,000, and we're going to make it a margined account, okay? We're going to hit OK. Now I can place an order to buy on a break above the channel, which would be buy, and let's buy 100 shares on a stop, and I hit OK, and I'm going to buy or sell 100 shares on a stop if the market breaks below the channel. So now I don't care which direction the market goes, right? Because if the market's going sideways through a sideways channel like this, we do have a buy indication from our bulls and bears indicator, but we've had several of those in this last little narrow sideways channel anyway. So at this point, I bracketed the market. I don't care if it breaks and goes long or if it breaks and goes short. Either way, I'm going to make money, right? So what I want to know now is my risk versus my reward potential. So we can come in here with what we call the risk-reward calculator, and that's this right here, the risk-reward tool. And we click on the little red and green dollar sign, and we click and drag the distance between the two bracketing orders. And what's that going to show us? That's going to show us that if we buy 100 shares, and we can increase the font here so you can see a little better. If we buy 100 shares, which is what we're doing, 100 shares of this market, and we can change that quantity right here if we want it to be 200 shares. But we're trading 100, so let's put it back to 100. So if we trade 100 shares, the distance between those two orders, if one got filled and then we use the other one or the other opposing order as our stop loss order, the distance between those two would be our risk area or our risk zone. So we're risking $402 for a profit potential of however far we think this market might move. And we can project out the move that we think this market might make based on any given tool of our Fibonacci rulers or our projection tools. Or if it drops this way, we could just say, well, let's look back and see how far back this market's dropped in the past. And we could say, oh, look, if the market came back and dropped back to this level here, or maybe it will drop back to this level here, we can go in and let's get rid of the vertical lines. Turn off the vertical lines on this one. So we've got two horizontal lines of areas of support. So if the market comes back and is going to go back into these areas of support, this is where we could say that these are profit potential areas. So we could risk $400 for a profit potential of $450. Or if it comes back to this far, we would be risking $400 for a profit potential of $767. So depending on which direction the market goes, and if we keep our stop loss orders at these distances, so let's say it broke high. In fact, let's play the market forward and see what it does do. And this market breaks up to the top. Now we could move, at this point, we're using our opposing order as our stop order. So if this market turned around and came back against us because we were wrong and we're not going long, where would we get out of the market? We would get out of the market at this opposing order. And if we left it right there, that's where we would lose $400. That's our risk. So we can move this, and we simply click on it and drag it to our new location. Again, we've got a rubber band. We can line it up with areas of support and resistance. Maybe I want to bring it all the way up to this green level right here, underneath that green tick. And so I can bring it up and put it right there. Now my risk area is much smaller. I can bring that up and say, okay, I got in at this level right here, and we just line that up with that level. And then this one here, we line up with where we'd get out if we were wrong, if the market turned around and came against us. So now our risk area is $224 for a profit potential of wherever we think this market might go. And we can use a number of different tools to help us determine projection points. But if the market came up to about this level, we would be risking, at this point, $224 for a profit potential of $835. Of course, as the market moves further ahead and further ahead, we're able to move our stop loss order forward in time. And once we get the stop loss order above our entry point, okay, above our entry point, we no longer have a risk zone. Our risk has gone away. And at that point, we're in the profit zone. And we would get out on a retracement back to this level here, and the profit would be the distance between where we got into the market and where we got out of the market.